And our simple view on semis first and then maybe Korea more broadly is that if we are in an environment macro-wise where we still have good global growth, maybe slowing somewhat, U.S. growing, we think 2.8% this year, 2.3% next year, but we only have a 20% chance of recession, so we're in the still growing well camp, and then we have still a continuing recovery in the broader chip cycle, and then the added demand driver of AI, as you mentioned. On top of that, we think that that's still a very favorable environment for the chip sector. So we're overweight IT, and we've been positive on both Korea and in Taiwan. More on Korea to our sort of concern, whatever, because Taiwan has done better. But we've been positive on both. And for us, simply the story in Korea, as of yesterday, closed at 8.3 times forward earnings, with 1.5 standard deviations below the 10-year mean. On a 24-month basis, which sort of takes sort of the cyclical recovery and looks even further ahead, you're still at sort of 1.5 standard deviations below the 10-year mean. We're trading at 0.85 times price to book for the market. That's a 20-year low, nearly. Foreign investor positioning in Korea is near also a decadal low. And you've got 90% to 100% earnings growth recovery this year. We think another 20% next year for the market. And then you get all that without even yet paying for the value up story, which the market's super skeptical about. But there's several catalysts coming up in the next quarter, including maybe some tax reform. And even though it's not perfect, you're still going from nothing to something, and you're really not paying anything for that. So you get this kind of upside optionality from the slower burning fuse of Korea copying Japan in terms of corporate governance reform, and all that with the yen, with the won above 1,300. And if you look historically, every time in the last 20 years on a monthly basis that you've entered Korea above that 1,300 KRW rate, you made money on a 12-month view. So it just seems to us risk reward here is pretty good.
So how do you trade the value up program? I mean, somewhere out there, as you mentioned, sure, it's better than nothing.
Right.
Then what are we waiting for in terms of the index, obviously the selection and the linked ETFs, and what do you buy? Is there a sectorial theme there, or what do you need to look for in terms of evidence of a shareholder return improvement?
So there's a couple of things, and obviously I can't talk about single stocks given my position here, but I cite this as an example. So when Toyota in Japan came out with some very clear shareholder-friendly actions, sort of self-generated, say, look, this is what we're going to improve returns in a number of different modalities, the stock moved on that. Hyundai Motor has done similarly. So this is not a recommendation of either, but I'm just saying that you're starting to see some moves in that direction. So, and the stock price responded. So the first answer to your question would be if you see individual companies making clear strides to improve their corporate governance, shareholder returns, focus on narrowing their businesses, spinning off cross shareholdings, that sort of thing, canceling treasury shares in Korea's case specifically, that's good. More broadly, I think that this introduction of this value up index will be important because there'll be a bit of a signaling of a so-called demonstration effect, and if you have companies selected on the basis that they are doing something positive to conform with the value up program, and they're included in an index, then that's sort of a selection criterion for investors to say, okay, these ones are at least making some positive move. I think there also will be sort of a leadership effect or a face effect that if you're chosen to be in that index, you get some sort of approval by authorities, and I think that other companies will then start to feel pressure. Well, maybe I should make some changes too. So you get this sort of crowding in effect for people who want to be in that sort of an index. So I think that in direct answer to your question, that when this index comes out, that'll be something to focus on.